Today, folks, my fiance and I have two stocks that make up 15% of our combined accounts, beating them like a drum on this channel. You know what I'm talking about. It is Meta and it is Google. And we've gotten a lot of news surrounding these companies with the new Meta glasses that are a huge advancement in technology to dating apps. We're going to talk about Google and just get an idea of where we're at today, because Google's been a very big focus on this channel as of recently. We made a lot of quick cash, took some profit, now going long some shares. So if you're on a path of financial independence, if one day you want to retire early, join me on that journey, hit that subscribe button. And I want you to look at my portfolio through my lens as a 33-year-old who's got a long time horizon, has built a very foundational portfolio and is looking for a bit more growth. And at this phase in my investing career, I advocate toward cost averaging into the many and focusing on the few, and focus on what you truly think you understand, because I've only made a lot of money on stocks that I felt like I had a really good grasp of. And honestly, you got to be careful with some of the overlap. And I think this is a mistake a lot of investors make here, because we look at the S&P 500 that makes up 70% of my portfolio. Within the S&P, Google makes up 4% of that. So if 70% is VOO and we take 70% of the 4%, that's 2.8%, guys. If my math is mathing correctly, that means with my individual Google position plus the overlap in VOO, we're getting pretty close to 8.5%, 9%, right? So it's a pretty concentrated position, but I'm very confident with this position nonetheless. And again, I've already de-weighted it down quite a bit, and I might do a bit more de-weighting just because, again, these stocks have done so exceptionally well and they are pretty risky to be making up that large of a position in our portfolio, but not as risky as some other major investors out there, like the biggest investors in the world, like Buffett or Ray Dalio. And I think Ray Dalio, if anything, is more conservative than Buffett because he does own some emerging market, the S&P, but then he really advocates toward Nvidia, Google, Microsoft, Meta. And you could almost say the same with Buffett, but Buffett's got like 30% of his portfolio in cash. Regardless, I think they're way more aggressive with individual stocks, whereas I'm a more passively managed investor because all the stocks I own are market cap weighted ETFs like VDY, VOO, with the exception of XEQT maybe being a more global oriented ETF, just to start diversifying me a bit more away from the Western world. But regardless, I want to talk about the updates with these companies and why I still love them with a passion and they remain core holdings in our long-term portfolio. With Meta, first and foremost, bringing down the valuation of my entire portfolio, because this is the cheapest of the cheapest, Mag 7 stocks out there. It's only up 27% year to date. I say only 27%. Comparably, we've seen some pretty wicked run-ups in some technology companies this year, but Meta's been doing a lot. I mean, a lot of people don't realize that similar to YouTube, you can go into their partner program and make a lot of money, and especially as Canadians that complain that TikTok doesn't really give us any creator fund and we're just posting for sponsored content. It's the only way we can make money on TikTok. They should maybe lean more toward Meta, because there's a lot of channels I've been following where they're making some crazy money on posting content through Instagram or Facebook. And I want to point out that with the new launch of the Meta glasses here with Ray-Ban, this is a huge jump in technology that I didn't think we were ready for. As somebody that religiously uses, the VR headset, I remember, Mark was saying we're trying to get the glasses and the VR to merge into an augmented platform that's comfortable. It's not a huge headset. And I can't believe we're there and it only cost $800. And people were comparing the event to the Tesla Cybertruck release or whatever, because the window broke and he had a lot of hard time, because there were internet problems getting this thing to work correctly on stage. But regardless, I think the technology is so profound. It's the first time I've actually felt giddy about a piece of technology. I know a lot of people are bored with the Apple events. I mean, people were saying that, this would be something almost worth lining up outside of a store to get your hands on. It is a really cool piece of tech I'm excited to see hit the market. Now, Meta's also getting into dating apps. A lot of people don't realize not only do they have Marketplace competing with eBay, and I love Marketplace for those looking to sell secondhand goods or whatever. I think Marketplace is crushing all the other Kijiji apps out there. And now they're into dating, which most people are unaware of. And all of this boils down to some of the best growth rates of any mega tech company. I mean, firstly, look at the price multiples. Trading around 27, guys. This is about a norm for them over the last decade, but they can trade as high as 30. If you go back to the early teen era here, guys, you're talking about even prices up to the 80s. And when you look at like Apple trading at almost a 40 times multiple, same with Microsoft, it's insane to me the growth that these companies have over those companies and still don't get any of the price to earnings recognition. Look at the earnings growth. We're talking about 20% for the last quarter, and earnings growth alone, EPS, forget revenue, EPS is up 38%. 30 to 40% EPS growth this is some of the highest earnings growth they've had in their entire history, by the way. I don't know how these stocks are trading at the multiples they're currently trading at, which is why I love buying them. And when it comes to Google and Meta, there's things going on that you can just recognize through the App Store. The top free downloaded apps are Gemini, now topping ChatGPT consistently for weeks now. Threads is almost the size. It's over half the size of X. And no one even talks about it. Thread is like a brand new platform competing with X. Only recently came out within the last couple of years and is already as large as it is mind blowing to me. And Google, guys, the platform that's supposed to be dying is still the 7th most downloaded app. And the only thing we need to go to the moon with Google is for Apple to finally partner, kill off Siri, partner with Gemini. Let's call it a day and go to the bank, because Google is trading at an insane, also 27 times multiple, guys. It is up 32% year to date. I think we got more room to run, but regardless, I love these companies. Google gives you self-driving, all the stuff you love with Tesla, but at a fairer value, and is actually a leader in this space. Genomics, testing new cancer drugs, guys, that are literally made by AI. I can't get over what this company is working on, with their fundamental business being an absolute beast. A beast. I mean, they're growing at mid-teen era. They're usually between 10 and 15% revenue growth, but you got to understand they make crazy revenue, 371 billion in trailing 12-month revenue, which is insane. Compared to Meta, if we take a look at Meta's revenue, it's quite a materially smaller company, only doing 178 billion. So Meta's got a little bit easier of a path to grow, because when you get to the scale of large numbers, guys, it's really hard to grow at a 20 or 30% clip when you're already making almost $400 billion a year, right? But that doesn't mean they can't juice out margin. I mean, we're talking about a company that's growing earnings per share by 22%, guys. Again, there are not many companies in the Mag 7 that are achieving this at the scale of these companies. I argue that Google should be the largest company in the world. They have the second most cash to Berkshire Hathaway, the second most cash of any company in the S&P. Their growth rate goes above Apple's and Microsoft's. I don't know how, guys. They're doing share buybacks, relentlessly, making my pie even bigger, because if 15% wasn't enough, it's getting even bigger here. And again, when you look at those price ratios, guys, again, Google was trading at some of the lowest out of its entire history when we were buying it, and even at a 27 times multiple is still materially lower than where it has been in the past. If these things could even get close to what Apple and Microsoft are trading for, guys, we could still see material upside from here on companies that foundationally make up our world right now. I don't think people understand, and the reason that I'm so bullish on these companies is we do not communicate how we used to, right? Like, we're using social media relentlessly. We spend most of our time. Go on your usage on your phone and see what apps you use the most. I bet you're spending hours on YouTube, TikTok, Google products, Meta products, all this stuff, right? And the way we used to operate business in our social sphere, guys, is shifting online still, and we still haven't fully adopted online. I mean, so many businesses are still transitioning to making their accounts online, getting presence online. We communicate 100% online, like through WhatsApp as an example. Like, again, this infrastructure that's here, people are not appreciating for what it is, guys. It is just the new world that is not going away. Accept it. Like, there's no disruption to YouTube. There's no disruption to WhatsApp. Like, these things have baked in now. They're not going anywhere, guys. So I'll pass the question off to you. I'd love to know what you think about these stocks in that comment section below. And what's the core holdings that are driving your growth? Love to hear about all of it.